I was looking through the portfolio you have over at Newton Investment, and you have a portfolio that's exposure of 11.3% to precious metals. Do you see any precious metals being vulnerable to what we saw this week with silver?
Well, I mean, the metal space or the commodity space is, undeniably unstable at times. Its pricing is unstable, but we hold it very much for a reason. And the precious metals exposure that we do have is actually to the physical gold through an ETC. And the reason for that is that in the bigger picture, in terms of the macro backdrop, we think there really is quite a big regime shift going on in financial markets and the economy. And that is one which is much more driven by reflation, because obviously we've got a policy response which is both monetary and fiscal in the form of MMT. And policymakers are pretty keen to run the economies on hotter with embracing a little bit more inflation. So real assets such as gold, I think, will continue to do well in this environment. And it was one of the best performing asset classes last year. But the sizing of any position in a security within the context of the total portfolio is very important. We have scaled back our gold position quite recently. But when you think about risk offsetting positions to return seeking assets, we don't actually believe that bonds are going to do very much for you in this environment. And gold plus other diversifiers are some effective hedges against the volatility that we're seeing in markets.